The Pulver Report. It is 9 o'clock on the 11th of March. We're going to have a super busy week with likely a lot of volatility. Some big U.S. news coming in this week, potentially some rumblings coming out of the Bank of Japan. We started to see some vulnerability last week as the markets finally broke their streak. I posted this in my last week in Discord. We ended up finishing, we're 16 of 19 weeks bullish on the S&P, 16 of 19 weeks bullish on the Nasdaq, and we are 15 of 19 on the Dow. Russell broke the highs around 207 to 208. Started the IWM started to creep up towards like 206, 207, but ended up finishing red on the day on Friday. So Friday was a pretty big sell-off day, and we'll take a look at everything right now. Let's go to the charts. Here is the SPX. Here is a strategy that I'm looking to build for this week. I'm going to try to narrow up this dead zone and this risk area a little bit, but looking for if I can reduce this just a little bit and tighten that up, and then have some profit peaks on the outside, as well as, depending on the price, if price blows through the left or the right side, trying to make some decent profit. So this was created when price is sitting at 51.41. Now price is sitting around 51.23. Opening bell is in about 26 minutes. So I'm going to look at pricing this out and see what the cost looks like. So let me jump into my options platform. Say good morning to everybody. Good morning, everybody. Happy Monday. All right. Ever, good morning. Larry, good morning. Chris, good morning. FK, good morning. Gary, what's happening, sir? Nice to see you. All right, 51.23. Let me pull up my options platform. We are good. And let's pull up a little tasty action here. Okay, so we're going SPX 51.25. That was a really nice intraday sell-off last week. Around 11 a.m. started to get the pressure to the downside post non-farm payroll, and big dumps on everything. Let me move this over here. Okay, take a look at the economic calendar this week. So this is the major news. We have core CPI, monthly, yearly, a bond auction, all coming on Tuesday from the U.S. We have pound GDP. We have a 30-year bond auction from the U.S. on Wednesday, and they're just ripping with these bond auctions. And then Thursday, we have PPI retail sales and unemployment claims. So this is really the U.S. in focus. Next week, Wednesday, is the FOMC rate decision, which should be a big nothing burger as far as the actual action, but could really shake things up. I was reading that we may see the Bank of Japan discussing wages. They have had falling wages. They're looking to make sure that wages do not get stagnant or fall behind. And there might be some shifts from, the negative 0.1% that we've seen in the Bank of Japan for over a decade to possibly getting into positive territory and finally making the big leap, like a lot of the central banks did in 2022, coming off of negative interest rates and zero interest rates to positive. If that is the case, we're starting to see it a little bit. If you go to the Nikkei 225, you can start to see some vulnerability here from last week. Highs at 40,000 plus broke that 34-year drawdown, and we're up on the morning, but we had about a 5% correction going into this morning's trading. So again, I still think like the 3, 4, 5% corrections are very healthy. Anything more violent, like pushing towards 8 to 10%, it still maintains bull market status. We just get those deeper corrections. So I'm going to set a chart alarm and see if the Nikkei can creep up to all-time highs, or will we start to see, I guess the clean break would be right here. If we take this low and there's a reaction to that trend line right now. Yes. So I guess I'll keep an eye on this, just like we do on a lot of the Japanese yen pairs that we look at and trade. The one pair that we're in right now in the flex trading room is the Swiss yen, which is trading at 167. We're up about we got in at 169, so we're up nearly 200 pips on the Swiss yen. We'll keep an eye on the structure on some of these other ones. Dollar yen all the way down to 146 from the highs at 150 and change. So here's 150.84, just falling straight down. Still some trend line support on the bigger time frame. Um, I'm not entirely convinced that the top is in. So I don't know. I will look for confirmation on the Japanese yen pairs. I'm telling traders this year in my trading room, if we're taking Japanese yen pairs for me personally, I'm risking very little money on yen pairs. My trade size is going to be small enough that my risk is going to be typically, 50 bucks or 100 bucks, and try to look for some big profit potential. But it's hard to really trust that the Japanese yen in a carry environment, especially a positive swap environment, when you're trading everything against the yen and getting paid to do so, unless we just have high volatility, which we have seen. Right, you go back to the currency strength chart, go back to Friday. Okay, I mean, we're starting to see a little bit more power on this vertical axis. We saw in the 80s and 90s on the Japanese yen during the week. We got up to 70 on Friday. So we start off with today's trading. Things are a little bit on the quiet side. Aussie down, Japanese yen strong once again. Everything else is kind of stuck in the middle. Okay. So, anywho, we will figure that out. I'd like to do one thing very quickly. I am logged into my broker platform there. And, ooh, all right. We just got another account landing. Sweet. Need to get some positions rocking and rolling on that one this week. Awesome. Let's take a look at building out this trade. So let me go into here. So if you don't mind, I'm going to build this trade out on the SPX, which is sitting around 51.23. I'm going to edit these a little bit. I'm still looking at the 15th and 18th expiration, so I just need to make some slight tweaks. So if we're opening up around 51.25, I'm going to go 25 to maybe, let's see, 51.25, take this down to 70-ish, and then another 50 to 70 points. See what that looks like. Maybe 5,000. Okay, so this would be the bearish side of the trade. 50, 70, we'll do a 65. Actually, I'll put this one as 5,000, 50, 75, and 65. See what that looks like. Then on the bullish side, so those are going to be my puts, and then these will be my calls on the upside. On the upside, we'll look at the 52, and I'm trying to think, maybe 52.50. 52.50, and I'll go 52.05. I'll go 52.10 and 20. See what that looks like. Sell, buy. Oh, this one's incorrect. 75 and 65. There we go. That should be correct. Sell. Almost there. I need to do 52.20 on that bottom one. There we go. All right, now we should have that diagonal look. Oh boy. So incredibly profitable to the to the upside. So 51.23. So 90 and 90. So I got about 100-point width, but we only need to drop about 50 points there and about 70 points there. I can stretch this a little bit more. So crazy profitable to the put side if I'm kind of skewed that way. Anyway, I don't need to bore with you, so I'll figure this out. But I'm trying to get these. This needs to be a cheaper debit. This week's expiration is also it's I believe this is a quarterly expiration for the S&P on the 15th. There's an AM expiration on the SPX. This is a monthly and a quarterly expiration, if I'm not mistaken, for March. So I think that's also forcing anybody that's trading the SPY to be paying for the dividend, which can make things a little bit pricier. So I need this debit to come down in about half that price. So anyway, I'll play around with the. So this says ideal strike zone. This is going to be more expensive, but if I get it through like 5,100 on the puts and through around 5160 on the calls, I can mess around with that. That's on the long side. I don't think that's going to give me the shorts. I want to kind of maximize profit on these shorts. So 52, 52, 50, 50, 70. Anyway, all right. I'll come back to this. Let's go to some charts. So big sell-off on the SPY. Like I said, we broke the streak, 16 of 19 weeks. Pressure to the downside. We're at 510.50. I do have some puts running on this. I have the 507.50 put. I have. Let me check on this account as well. Let's take this one down. Go to positions. Look at my SPY. I know I have a couple other puts going as well. I am going to look to also go out of the money and sell some calls, out of the money, sell some puts, do some cash secured prices. I have a 513 put and the 507 puts running. So that's short term. I'm looking to see if we have some corrections. Ideally, I'd still like to see a correction in the market if possible to come back, especially for the SPY because we didn't test. If we can come back and test this NVIDIA gap, that should be around 503 to 493. Let me confirm that price. That started at 503 and fills at 497 and change. So if we can fill that gap and possibly, threaten this trend line, I think the correction that I've been looking for would make some sense. There's a, let's say we touch the gap there. There's a 2.9% correction. Let's say we fill the gap. That's a 4% correction. That's decent, right? That could keep the bull market still in check and still maintain all the integrity of buying the dip. But at least that would be a necessary run since we've had a 25% upside since that bottom in October of last year. So watching that very carefully. I talked about this last night in a session. See that the dollar is bouncing off these lows. And I did take a basket trade on the dollar that's dollar strength. I'm in a bit of a drawdown with those right now. But if this bounces and this dollar index heads back into this yellow box, again, the dollar is, to me, the dollar has been incredibly difficult to read. I was really fortunate that auto trend system, my hyper trend robot picked up on some of those dollar crosses and made some nice profit. I also picked up on some yen crosses and made some profit. I found the issue with the class we had on Friday with the stop loss not showing up on my chart. I need to go into that VPS. I could do that today. I just have to go into the VPS and I need to click on all the time frames and get all of the MT4 data to load. So it had nothing to do with the system itself. It was just loading that data on the multi time frame. So the 1, the 4, the daily, the weekly, right? You load all that data. Now all of a sudden we have enough bars of memory to pull that stop loss and take profit and use the multi time frames in the inputs. So that's an easy fix, which is nice. Okay, so watching the dollar very closely this week. Again, if the dollar continues to weaken, that's fine. That's good for the stock market. If the dollar rips back up here, that probably puts the brakes on the big rally that we've seen. Also, a couple of things. NVIDIA, big rejection on Friday. We're trading here at 867, down another $8 pre-market from the highs. We got up to 974. We're down over $100 from the highs last week, which puts us at around a 10% correction. If we open up a little bit lower, we're talking about almost 11% correction in a day. So I looked at this from, if you go to the weekly time frame and the daily time frame, just a swing, right? Just take this low and this high. Levels I would expect to see pullbacks. Here is a 23 to 30% pullback, and here's your 50 to 60% pullback. So even just using some simple technical analysis, here's a low, here's a high. So here's your low, here's your high. Uh, you know, are there buyers out there ready to buy the dip? Possibly. Are there heavy profit takers out there looking to rotate out of Nvidia, which has clearly been fantastic momentum, but pushing it elsewhere, maybe lower risk? Possibly. So we're going to find out. Okay, that was an earnings calculation, which was pretty accurate for that week. Oops. Okay, we're good there. And I've got some credit spreads way out of the money. 640 and 635. That was the expected earnings move. All right. So watching Nvidia, which has been on the radar, I think everyone has been like hearing about it. Now noticing like, oh boy, that's a big drop from last week. Apple, which has had a 15+% correction. Apple's hanging out around that 170 level. If we go sideways on Apple, this low, this low, this high, this high. Curious to see if this 170 level holds, at least in the near term. And same thing on Google. Google threatened the 130 mark. Here we are now at 135, pre-market 136. So opening a little bit higher, where Nvidia's opening a little bit lower. Go to Tesla. Tesla 175.34. Looking to stay right where we had Friday's close. There's still a nice little pocket gap up here around the 185 to possibly 197. If we hold this current area, we do have some oversold conditions and divergence on Tesla, so I'll be watching to see if that area holds technically. Earnings this week, I took a screenshot of this, posted this in Discord as well. We're towards the end. I mean, we had 98% of companies reported earnings this week. We have Oracle. We have 256 companies in total, but I think the two that I'm possibly interested in, there's four actually. Oracle, Adobe, Dollar Tree, and Dollar General. Those would be the four that I might consider doing some options on. If there's good or bad, I'm looking for some type of decent surprise. We're going to have to, if we want to get paid on these options plays, especially for earnings, we want to have a decent surprise. And I'll probably play some type of, debit spread situation to lower the cost, try to get a max profit by Friday. Oracle's one that we could play today. We can take a look at this at Equities on Demand. Dollar Tree is Wednesday. Remember, we have CPI on Tuesday. We have PPI on Thursday. So it's going to be more difficult to play Dollar General and Adobe unless you want to go out to next week's expirations. I wouldn't do anything as tight as Thursday, Friday. That's way too early. We need to give these prices a little bit of room to run. So I wouldn't mind looking at a couple options plays or earnings plays on those stocks, but we have time on each of those. No other real notables came to mind. So if anyone's looking at post-COVID Tupperware, anyone's looking at Kohl's, but we don't have any ownership of the stocks that I see in here in the list outside of Workhorse, which was trash from 2020 in a SPAC and an EV play that failed pretty much. So, okay. If you have any charts, any questions, any tickers you'd like me to take a look at, let me know. And looks like I will be jumping on also at 10 a.m. With Nick and team at A1 Trading. So I'll post that in a little bit. I'll probably cut the session off in the next 10 minutes or so for here. I'm going to try to get my option trade priced in as opening bell kicks in. I want to try to optimize this and get this debit down a little bit. Clearly, this is where I'm either paying too much on the put side. I mean, I need to do a couple things here. I need this peak and this peak to be about the same. So I'm trying to get these a little more symmetrical. I'm clearly skewed to the downside. If we're going to have a correction, anything that gets below 50.25, that'd be like 502, 503 on the SPY. Then this is ridiculously profitable, which could be great, but I'm still giving myself a decent dead zone that I don't necessarily want to look at. One thing I did want to see on the SPY is I noticed this last week, and I'm hoping that it's different. If we look at trading the SPY for the 15th, Okay, so I'm starting to see that the expirations are sprinkled in and they're dollars and dollars and dollars. Okay, this is good. So we have all dollar strikes on the SPY, which is good. And then if I go to the 18th, this is a problem. So I don't think I can take the same trade that I want to, because the strikes, I can't believe that the SPY is not filling in the gaps here. And I wonder if that's because we do have a monthly expiration on Friday the 15th, but coming into a Monday the 18th, why do you have $5 freaking gaps, right? Like we have $5 spreads on the SPY, one of the most liquid instruments, single day or zero DT options, and we can't fill in the gaps. Like that's embarrassing. Now, if you wait to next week, I feel like this gets filled in, but this really makes it difficult and challenging, and it's a huge disadvantage if you don't have these gaps filled in to do like a 520, 521, 522. So that makes me hesitate on taking a trade on the SPY this week. Outside of I'm looking at selling a call. Let's see here, 520 by 507. You see what I've got going on here for positions. The 502, March 15th. That's a 507. Okay. So I might look at rolling this one if this is a put. Oh, that's the long put. Never mind. That's the long put. That's what I want. I want to sit with that long put. And then the call, which should have been a 522. 522, these are long calls, and I'm selling against that. So I've got the 500 call. I'm selling the 522s. Those expire today. I don't think we're going $11 to the upside, 11 points to the upside. So I'll be looking to add additional sell calls probably after expiration today or towards the end of the day, because I'd like to get some extra premium in there with the volatility we have expected for this week. All right. So again, that's my stuff to handle, not you. Let's see here. Jacob, good morning. Keith, good morning. John says, you still holding euro dollar, pound dollar shorts? Nope. I got out of the pound dollar. That's the only one that I reversed. So pound dollar, we have a pullback. I'm still holding pound dollar long. Well, I should say this. I closed out of the pound dollar. We took a short right in here. Once we closed above this 27.50 to 28 zone, I stopped out. We broke above this yellow box. I did reverse my position. So pound dollar is the only one that I'm long. I'm trying to target 1.30 on the upside. If I'm wrong, then I will take a small loss there as well. But as long as we stay, I mean, we're looking at we never really had follow through on the pound dollar below these lows, but we did have a nice breakout above 28. So I could be wrong. This could be where like the market does the fake out and then the dollar starts to rip and comes back down where the pound dollar gets weaker. If that is the case, my pound dollar long, if we come back to let's say 2700, I will take a loss on that long because I'm looking for this to stay bullish. If it doesn't, I'll stop out. I'm still in my dollar strength positions. I'm still short Aussie dollar. I am still short euro dollar. I am still short New Zealand dollar. I'm still long dollar Swiss. And I did get stopped out of the dollar yen because the yen's been stronger. So the basket trade's been beat up a little bit, but I'm not going to sit here and just be wishy washy. It's like I see the direction of the DXY postured more to the upside. I'm just waiting to see if I am correct. And I traded really small in the basket because I'm not quite sure. If I have a little bit more confirmation, then I will take my losses and then probably increase the trade size by a little bit, right? I get in for let's say a 0.05. I'll increase the trade size to a 0.08 or a 0.10 and ride out hopefully what I see is some better confirmation. Okay. Thoughts on Bitcoin? Yep. Everyone wants to know about Bitcoin. We're trading at 72 and change right now. I did read something very interesting. 75,000 might be a ridiculously important level for some massive liquidations. I'm just saying this could quickly, and I don't know if it's going to happen. I'd obviously like to see a pullback towards 60,000 or 55,000 to get a chance to buy some more Bitcoin. But what would be really interesting would be I read about some of these liquidation levels and stop losses sitting at 75,000. If we breach 75,000 and it's not defended, it would open up that liquidity we could see this get parabolic pretty quickly. So I was just explaining this. It's a lot like, I mean, it's not GameStop. Obviously, it's not GameStop, but the price action and the type of move that could happen with liquidating stop losses and running through stop losses, um, could be the difference between, getting to 75,000 and then quickly running to 85, 95, 100,000. So, does that happen, in the next 2 to 4 weeks? I have no idea. Do we stall prior to that 75? I have no idea. But the trajectory's been pretty solid, obviously. This has been an incredible run. I'm at, new all-time highs in my, earnings on Bitcoin, which is exciting for everybody, obviously. And I still like to see a pullback. I'm still looking to see if we have a, fib in some capacity here. If we form a bit more of a top, right? Or even take this swing on the higher time frame and say, okay, if and when we have a top at some point, where's my pullback? I don't know, but there will likely be a pullback, and I don't think a 1 day pullback is enough. I don't think that really justifies, the typical like efficiency of a 5-0 pullback or a 382 pullback. So again, wait and see, watching and seeing, watching closely, but excited about breaking the 48,000 mark, excited about breaking all-time highs and not necessarily getting smashed right back down. We hesitated for a day, but it got bought right back up. Gold, same type of situation. I think gold looks very strong to the upside. We talked about this one last week. I mentioned in the weekly time frame, if gold stays above this 2075 handle, pretty bullish on it, and I think this says a lot. So I have a couple of things running. I've got some long-term calls out for the next 3 months, and I also have some out of the money credit spreads on GLD, where I'm looking to see if we hold this level, hold this level, hold this level. As long as we stay above 2075, I'm looking for some type of bull flag and then rip, or we go, up here, have a little bit more of a pullback, and then continue to go higher. So that is what I'm looking for. That's what I'm watching. GBTC. Sorry, I thought it was just Bitcoin. GBTC. Um, GBTC has been running great. I have taken some profit on my GBT position. Once we started threatening these all-time highs on Bitcoin, we got up to $50. I took my profit on GBTC, and I'm putting that profit into IBIT, FBTC. I'm still trading BITO. So GBTC, simply because of the fee structure, it's like a 1.5 to, I think it's 1.25, 1.5 for the fees for holding, versus the other ones. IBIT is a 0.25, FBTC is a 0.25. So I have rotated out of GBTC. It's been great. It's been outperforming Bitcoin. I think this ends up coming back to a tighter correlation, but really, I mean, Coinbase and MicroStrategy and anything Bitcoin related, like, they're just not doing anything wrong right now. And I think that's exciting. I think that the reality is we're going to have some pullbacks, right? I mean, these look at the last 2 weeks of MicroStrategy. This is absolutely insane. This stock has arguably never had this type of run. I mean, you go back into 2020. I mean, crypto was around then. There was some there was some correlation with MicroStrategy, but not nearly to the extent of what it is now, where this has now been just outperforming Bitcoin like crazy. And the stock is not quite at all-time highs, which it was, I think, back in 2000, 2001. But this rip has been pretty phenomenal. So, but yeah, point is on GBTC, I've rotated out of GBTC and I'm putting it into some of those other ETFs. The one that's BlackRock, which is, I believe, IBIT. The one that is FBTC is Fidelity. Those are huge custodians with trillions under management. So they're in the game. I take those over the other 9. I know there's some other ones out there, but the one that I'm in that hasn't been on everyone's list, but I talk about it quite a bit in my trading room, is BITO. This is ProShares. This is the one spot related ETF for Bitcoin that you can trade options on. So I have some long calls at 16. I paid $2 and change. Right now they're trading for $17. So I mean, if you do the math on that, I think I paid about $3 for it. So $3, and we're trading at 17. So 17, paid $3. We're up 560% on that call position. and I'm out to January of 2025. So if this just gets crazier and crazier, what's interesting is, we're trading here at 33.24, all-time highs on BITOs all the way up to 40 and change. We're at all-time highs on Bitcoin. So I'm kind of hoping that this one continues to rally up and take out these highs and let that call value get even more profitable. All of a sudden 16 goes up to 40 plus, and we're trading at, 16 to 44 would be what, $28 out of a $3 call option. It gets pretty wild, right? And that's all exciting. So one of my better positions here on BITO, you can see it right there, running for about $5,800 in profit. Not too shabby. And hopefully there's more to come. I do have some exposure on IBIT as well. Bought some shares, that's up some dollars. So anyway, there's some good stuff happening here. Yes, yes, yes. MO is trading at 42.39. So this one has a March 28th covered call and April 5th covered call. So I'll be looking to possibly roll these out. This is a low volatility stock, but a dividend stock. We should have dividends coming here before the end of the month. If I go into MO for a second, we have dividend on March 22nd. So typically for a dividend declaration, especially around 90 to 95 cents, we probably will see the stock dip, which hopefully keeps my, $42 and $43 covered calls out of the way. Otherwise, I will probably just roll it out, get myself some more time, keep the strike similar, maybe run it up a little bit if I can, and just keep chipping away at lowering the cost basis. But I don't want to get in the way. If this thing's going to run, if MO for just a boring dividend stock is going to start breaking to the upside, this is one thing I want to not stay in the way of. I don't want to be in the way of price appreciation. If this stock is going to run back up to $48, it does me no good to cover calls at 42, right? So I could possibly look to roll it for a debit, and I know that increased my cost basis. But if I can roll it up to 43 or 44, 45, and actually have it, let's say it cost me, 50 cents. If it costs me 50 cents to roll, but I get another $1 to $2 of upside, to me, that's worth it. It's worth, getting 50 cents more profit potential, getting $1.50 more profit potential for a stock that I think is coming off these lows and possibly has room to appreciate up towards 48 bucks. So again, that's kind of one of my portfolio plays this year as well. Okay. What about the Bitcoin halving April 14th? Yep, I know everyone's wondering about that. We had the big news on Bitcoin that came into. There were two things, right? We had the big SEC announcement for what ETFs are going to be approved, and that's right here, right? Where as soon as that happened, we had a big dip on crypto. Now we're talking about the halving happening in the next month. I mean, does price just run ahead of the halving because there's more scarcity, right? There's less to go around. You have all these ETFs now that have accumulated like 300,000 Bitcoin in the last couple of months with just crazy amounts of value, plus the price appreciation that's come in so quickly. I don't know what the halving is going to do. I don't really care. I think that technically I'm still bullish on Bitcoin until we're talking to 100 plus $1,000. If it starts to get ridiculously overbought, let's say I just use something as simple as the relative strength. Okay. Relative strength right now is going to be pushing way above 70 on multiple time frames. So here we are trading at 83. Look, I look at it this way. If this thing is trading at 89 or 90 on the relative strength, that is such a crazy calculation. It's almost, you see here, even some of those biggest bubbles we've seen, we're trading around 86 to 87. Trading back here, that's 2017 when nobody's even following Bitcoin. We're trading up here in the 90s. So I will be watching like what is the sign for crazy amounts of divergence. I do see that we have pivots. This is a pretty simple layout, right? We have a ton of pivots right now that would be calling for a correction. I think a correction is due. I'd love to see a correction, but I'm also not sitting here like taking profit right now. Reason why is if we have dips and pullbacks, I think those dips get bought. So I'm still pretty interested in just holding firm. If we get the upside run to 100K, then I'll start looking at, as a trader, taking some profit. Getting in here at 17 and 25 and 31, that's a ton of profit. It's not a 10x, but it'd be a 5x gain. That's a lot. So it doesn't mean that I'm any less bullish and less enthusiastic about Bitcoin as far as long-term holding, but it does mean that as a trader, there's definitely some profits I want to be taking and protecting, right? I can still maintain a position, but I'll probably peel off, half of my profits, maybe more, and then look to rebuild. So that's all. So the halvening, Trish, I don't really know what to make of it outside of I can go back and figure out what happened to price action the previous halvening and the previous halvening, um, because typically has there been anything bad happened, right? Like when we show the halving, and is this the market running up ahead of it, right? Running up ahead of it. This is the same thing we saw in the SEC announcement: buy the rumor, sell the news. The rumor is now. The rumor is the halving is coming. That's the next big news announcement for Bitcoin. So, but I do think that since we're at all-time highs, there's enough excitement, enough momentum, enough price action, enough inflow that this momentum takes us up into possibly that 100K mark, and that could be a pretty awesome milestone before we see any dramatic pullback. But the one thing that's been pretty impressive about this the entire time is as we have these big runs and we have all these pivots and we get all these conditions like we see technically in Forex and we see technically in a lot of charts that cooperate, it still behaves. So I don't think this just breaks and goes to eternity. I think this breaks and gets overbought, gets overextended, hits highs, creates divergence, and then corrects. And the traders that are taking profit will be thankful that they did. The traders that are buying in because I feel like they've been missing out. Now everything's about Bitcoin and they're buying it now at 72 for the first time ever. That's going to feel a little bit worse when you get another maybe $20,000 to $30,000 of appreciation, and then you get a pullback to 50K, and you're like, oh my gosh, it's like it's volatile. Everyone going into it should know that, you know, but it's going to be a wild ride. Okay. Um, I think I'm going to let you go for today. I'd like to take a few minutes to myself and just get a couple things priced out versus trying to fumble through some pricing here. I'm just going to move around some legs on this quadruple double diagonal, which is a fancy name for we're trading at 51.12 already. Oh, geez, Pete. So I need to start getting this thing shifted a little bit because price right now is at 51.10, which means I need to go out here towards like 50.60 to 70, maybe go down to this 50.50 mark. So I'm going to try to price this out, but the debit is just way too expensive right now, and I need to figure out how I can lower that cost basis slightly. So I'll do that. And as far as my price action on the day, 51.13. So we gapped lower on the SPX. Just looking at some gamma levels, we gapped lower on the SPY. We're sitting right in the middle. Mondays are typically range days. I could see a bear call spread in action today on the SPY or the SPX. Let me see if I can get an SPX in. Could I get a bear call spread going in today, 50.50 or higher? Let me see what that price is out to be. If I looked at SPX. So if I did a trade for today's expiration, the 11th, bear call spread, that's an 8 delta. Could I get something out of this today? Not bad. I could get, not great though. If I move this down, 51.45. I mean, if we fill the gap and rip, it's like I need to stay above 50.50 today. If I wanted some safe profit on the day for a bear call spread, I could just do that. I mean, I could do something. I mean, that's a lot of buying power. So that's probably not ideal. Delete. Let me go to the SPY, make this a little bit cheaper and more affordable. SPY for today's expiration. Keep it out of the way of 5.15. Could be challenging to hit. 5.14 were the highs from the highs last week were at 5.18. I think 5.15 could be difficult to hit today, but I'm only getting 7 cents for it. It's like, it's just not good. So I'm going to set up the trade for the next, 7 to 10 days or 5 to 8 days, I guess. Go out to Friday, Monday, and see what that looks like. We have a lot of volatility. We might be paying for that volatility this week. So like I said, I'll wrap up the session here. I'll take a little breather. I'll be back on the YouTube channel at 10 a.m. if you'd like to come back and join me. If I get a couple trades in, I'll share those with you. And equities on demand, I will post that in Telegram right now. We're going to have class at 11 a.m. Okay. So let me jump in Telegram here for equities on demand. March EOD live session today at 11 a.m. Eastern time, March 11th. Okay. So I'll wrap it up here. Before you leave, if you're on the YouTube channel, hit the thumbs up button for me, please. I appreciate that. It helps the channel, help the algorithm. If you haven't subscribed, go ahead and do so. We're live on Mondays and Fridays. If I have time to do it on Wednesday for the midweek or the market minute on a Wednesday, we can do that. And I will see you all in about 17 minutes. Okay, talk to you in a little bit. Just come back to the YouTube channel. Chat soon. All right, bye.